Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is the 6th. July is in full swing, and we got some numbers today. So remember that I know it's been a long weekend, guys. It's been a long weekend, but remember we had an employment report before the weekend that was really confusing. So today we're going to get some market some market reports. Like market, that's the name of the organization that puts out the PMI surveys, and there's going to be an ISM survey, so that could be significant. And oil, meanwhile, is that whole thing they postponed that. So yeah, we could have some interesting trade day. Let's go to the charts first. So here's the E-mini. You can see it's about where it was on Friday, but remember on Friday it was pretty good in the E-mini. Meanwhile, over in the Treasuries, yields went up. So a little bit of confusion on that, but I think that the takeaway that they're getting is that the report was good for the economy, but the employment picture isn't really changing, and therefore interest rates are likely to remain low. So Treasury is moving up a little bit, and this has been across the board, and even in the overnight session here, you know, Europe and Japan pushing the bonds up. Oil, meanwhile, oil was going up because basically they postponed the OPEC meeting. So like they just, all of the current restrictions or the current outputs are like still in place. They didn't come to an agreement. The UAE though wants to be able to produce more. So that's what's going on there. I don't know if there's some other, given the timing, I don't think that that's another development. That's probably just some mean reversion going on right there. Gold and silver moving a little bit higher. I feel that their precipitous fall here was a little bit unjustified. Like, I remember the news and everything else that was going on there, and you know, it was in line with the macros and correlations and everything, which direction it fell. But the almost complete washout that they had, I don't feel is justified. So we're kind of getting into a more reasonable area here in the 1800s in gold and silver, so that's good. And copper's maybe developing a little bit of a trend now. You can kind of see maybe a bit of a trend. Still kind of reeling from China coming in and tamping down on speculation and so forth. But I mean, the issue here is that, like, if it's going to be worth more, it's going to be worth more. And you tamp down on the speculation all you want. Like, there's demand, right? So that's basically where we're at. So hold on. Oh, you know what? I didn't have. Well, why did I click an order in there? That must have been a misclick. You know, I've been doing that a little bit too much lately. Let's just make sure that I don't have any. Just make sure I don't have any out there. Okay. Oh, and you know what? I need to fix. So we're gonna run it. Yeah, I don't have the combine accounts on here, so in fact, I think I was doing it through. Well, hold on. I'm gonna. Yeah, let me get over here so you don't. Yeah. Okay, so I'll go fix that. Boy, where was it? there it is. There it is. Okay. And then I gotta fix it over in here. Good deal. And then that means I want this strategy over here. Do I not have that? Oh, I have to close this workspace. They're all gone. That's annoying. So over the weekend, I was doing some back testing. I was testing lags. And yeah, I really screwed my NinjaTrader up. Like the workspace survived, but like everything else got wiped. Like a hardcore crashed NinjaTrader. It's kind of funny actually. Okay. So I think we were doing 9 and 1, and 12 and 1, size 1. Yes. There. Oh, I have to turn off global simulation mode for starters. I feel like I'm missing something. Well, I'm a little uneasy about that. I had to recreate the strategy over in here to do it because, like, maybe I changed a parameter or something from what I was testing, but we're gonna go with it. So, all right, Brandon Robbins, good morning. How are you? Let's turn on the text to speech here. Okay, that's something's not right because it should be adding stuff to the chart and it's not. Oh, it's not because I added it over here, not over here. Remove. So let's try it again. See, I knew I was screwing something up. Better. Much better. Okay. Now, action in the E-mini is pretty choppy so far. I do think we will get some movement a little bit later, but not until after the market opens. Got services PMI. So yeah. That said, probably leaning towards the buy side. Oh, I haven't turned it. No, you have to say that again, Uzi. I didn't turn it on. You know what happened yesterday was like I turned it on and like nobody ever used it at that point. It's kind of funny. I'll turn it on here so that because I'm going to eat a little bit of food. Man, them treasuries, they want to look at them popping up there. Well, they might be a little constrained for now. There's some pretty significant absorption at 26.5, but it looks like the buyers are still really strong over in the treasury market. It's kind of funny to see the yield curve flattening here again today, too. So it makes sense if yields are going up, or sorry, if yields are going back down, they expect the yields are going to remain constrained for a while, then the yield curve should flatten back out. And then when they're expecting the yields to rise again, then we'll start to see some steepening. And in particular, that 10-year has seen a little bit more demand than it probably should. So at some point, I think we're going to get a really good steepener trade off of selling the 10-year. But until then, Brett, you started a combine. Wait, you've already taken some trades, eh? Eh? I don't know if Jay will take a trade today. We'll see. He's been a little. It's kind of funny. He'll be like pretty constrained, and then for no reason he'll just take like a bunch of trades. But I think the more active the market is, the more accurate he's likely to be, because he's reading order flows. So, and we'll see if he doesn't trade enough. Then I might have to take the reins, and make a few discretionary trades. Actually, if something happens in the news that we feel really confident about, we could go and take a trade. So.
Brett Turley says started a combine to do some silly things. So far, so good.
I mean, having thought about it with the combines, I really feel like that I have what is the word? It's like a better word for passing up, neglected. I've really neglected the opportunity to do crazy risky, inadvisable things with the combines accounts. You know what I mean? Like, there's some trades that we've taken on Sim that were very irresponsible that worked out really well, And I've definitely had some periods lately where you could have passed combines. Like, I've had periods where you could have passed combines trading a micro contract on ES. Like, come on. In fact, and I went and I did the back test. Jay would have passed it last month, so. All right. Dangerously high temperatures expected this week as the heat wave continues across Utah, with temperatures up to 105 degrees on Wednesday and Thursday. Yeah, that's not that big of a deal. That's not that bad. It usually gets that hot every July. I think it'd take 28 too. For them to blast through 26 half 27 this quickly would mean there is a super strong bid in Treasuries. I am a little, okay, how much was in on this? Yeah, it was a lot. So I'm a little on edge now. Like, the order flow in the Treasury suggests a strong possibility.
Specifically got the combine to trade ZN, which I haven't much. Will trade micros in my account when CME releases them.
Yeah, that's the way to do it. The Treasury complex is showing some significant signs of informed trading, and it's all buying. And I'm not exactly sure where it's coming from. Nothing has happened, so it seems like it's probably just a continuation of the trade. But I mean, come on. Well, now they traded a lot at 28, so I don't know. This could revert. Yeah, so I'm really excited about the micros too, Brett, because I've been doing some reading. It's kind of interesting when you read the books, like the theorists, the scholarly people, they will have like, okay, here's a theory about what moves the market, and here's like competing theories. And when I look at it, I'm like, oh, well, these are just the major factors that influence the Treasury market, you know? And, but, you know, they really have to break it out and go detailed about, you know, does this move it, and how do we empirically prove that this is a factor in how treasuries move, right? Excuse me. But as I'm going along and I'm reading, I'm also finding that there is a lot of well-documented inefficiency in the treasury market. Like, which seems kind of like counter to what we know, right? Like, we always said that the treasury market is like the most efficient market in the world. Well, it seems like that is the case, especially when you look at like treasury outrights. Like, it's just really hard to trade and make money, especially with trending strategies. But then you see all of these things when you get into like the yield curve and forwards and stuff like that. There's actually a great degree of inefficiency. So even the most efficient market in the world has a lot of inefficiency. Now, whether or not you can take advantage of that inefficiency is another question altogether, right? But I think that it presents some interesting opportunity, right? Especially since we'll be able to put on spread trades. Like, I'm thinking here, you know, the employment situation starts to improve, and we just drop a big old fatty, buy the 5-year yield, sell the 30-year yield, and just put a steepener on it. You know, and that could be one that could run for a long time. Or we could try calculating forwards and trying to see if we can work out a hedge strategy arbitraging out the inefficiency in the forwards. Like, there's like so many options. And heck, who knows? There might be inefficiencies between these futures and the new micros, you know, being on different sides of it. There's certainly going to be some interesting quantization, because they're going to, this is going to be like 2-to-1. Like, it's going to move 2 ticks to the 10 years 1 tick. But they're tracking completely different things. This is tracking price. These new ones will be tracking yields. And not only that, but they're tracking a different treasury, to be honest. These track the cheapest to deliver, which is there's a bunch of different treasuries that are eligible, and then you can go in and do the calculations about which one, you know, is the best for you to deliver physically. Whereas the yields will be based off of the on-the-run treasury, or the most recently issued, right? So there's going to be a difference between them. And when you put that on top of that, you know, a change here might not exactly result in like a full tick move over here, or, you know, whatever. You know, that's what I meant by quantization. There could be some interesting opportunities. So, like, it's just like the world, but it's kind of difficult because I don't have any data to test with, right? So what kind of strategies we can pull that will work best is a big question, but Newsquack says 10-year yield is getting pretty close to falling beneath 1.4%. Well, when that 8K traded at 28, they really backed off. So I don't know if that was some sort of a stop run or what, but they were buying it very aggressively. There was a good 11,000, 12,000 contracts net buying in the Treasury, in the 10-year in particular, to get it up there. So I mean, 26 half still being bid is still really bullish in my view, yeah. I know, I got it. Okay, I can buy it, and then the treasuries won't go up anymore. How about that? I think. Well, I don't have enough volume. I want to do something. One of the things that I think has been screwing me up in the treasuries, like I was looking at it, is he says, "Hey, that's my strategy." Yeah. Wait, which way are you? I can go.
Uzi Knesset says, "Hey, that's my strategy."
I think one of the things that's been screwing up my scalp is that I've been taking it where there's not enough volume. I think that, I need to be seeing 4,000 contracts a second or something like that going through in order for this to work. And we're not getting that right now, right? And I've taken way too many in those kinds of periods where probably I should have just sat on it. This, maybe having the power meter on would really help there, right? I don't know what to do on that one, right? It's the screen real estate is really starting to get, precious. The screen real estate is really starting to get precious. Especially, so like we got this chart down here. I guess we don't really need this chart. I guess I kind of had this one on here because I didn't really have
Edwin Cruz said,
anything there.
Programming session go.
It was pretty good. So we worked on the risk control center. Actually, do I have that open? Doesn't look like it. Oh, you know what? I need to update something. No, wait. Why is my my dollar index is not working? Maybe if I refresh here. There we go. Okay, that fixed it. Okay, so let's just start a new one. Well, the issue is that I don't know. I can't show you, but this is the way that it works, and then you can set your limit. And then it should show you how much you've lost or gained. This will actually show you I think that it should only show you if it's like negative. So maybe we would change that. But it's like something that like you can see stuff and you can work with. So from here, I think the next steps are going to be adding different types of rules and a way to make it so that you can change the rule type and actions when rules are broken. So I think the risk center is coming along quite nicely. And there was a couple of things that disappointed me that it appears WPF were just too much of a limitation. But it's okay. It's okay. Anyways, so that's what we did. Later in the day, I did get into, so I made an indicator for something that didn't take very long. And then I started getting into like modeling treasuries. So I've definitely found some resources around that look pretty good for like modeling treasuries, including ones for doing it in Excel, which maybe I'll start in Excel. I'm conflicted if I want to go between Excel or using R. Like the thing is I think that I would be more likely to do like a statistical analysis sort of stuff on them, but then I'm like, oh, but would I even actually do that in the treasuries? Like the main thing right now is I just want to be able to say, okay, like what are the forwards? But where I got stuck was I just didn't want to go and type in the numbers. Like I know I could go in and like look up, there's a couple of different new sources where I could just look up the prices or the current yields, but and it's just didn't feel, I don't know. I wasn't going to do anything too serious that day anyways, but
says, hello, sir, I have a question. Please tell me if can I trade without video card in PC?
Well, so you can. So here's what you need to understand is that built-in video cards share resources with the rest of the system. Does that make sense? So you have a video card and it has so much RAM, it's going to use the actual RAM on your machine to do that. So the gist of it is that your overall performance on the machine when you're using a built-in video card is not very good. And I'm not going to say that it would like prevent you from trading, but it's, if you don't have a video card in your computer, it's probably the first thing that I would change. Now, the split side of that is that you do not need a good video card. Okay. Any video card, like literally any card made in like the last 10 years would probably suffice. If I was going to buy a new card, I would buy a GeForce 1650. Okay. That's like $200 maybe, right? But you could get even older cards. You could go and buy used cards from people, right? So it doesn't have to be a good video card, but any video card will improve your performance. Will a 1660 super work? Yeah. 6060 would be more than you need. 1660 would be more than you need. Those 16 series cards are good because you can record a lot more easily with them. I want to move over to a 16 series card. All right, they really came back in the treasury. Now, was it the volume come all the way off too? No, it did not. Oh, that's interesting. Well, I'm glad that I didn't take a trade because we never really had the volume for me to take a tick out. They all traded pretty in concert. Maybe there was a little bit of room in the 10-year could have done something, but I'm not sure where it would have done. And look at how easily it fell through at some of these places too. That is difficult. Yeah, no problem. How does it say your name?
Swapnil Gayankar says thank you for the help, sir. Grin.
Swapnil Gayankar? I don't know. The Treasuries, very wild moves. I'm wondering if this move back in the treasuries is not somebody taking it the other way, but rather like mean reversion or whatever after somebody, bought in strong. So maybe somebody just really, for whatever reason, needed to buy. And so their order flow is what pushed things up. But that ultimately the market still thinks that we should be down in the, probably 24-ish area. Oh yeah, I forgot that I had that relative volume thing on. So you notice, I think it does a really good job of highlighting at that very moment what is moving. So today, oil is the thing that's moving. It's down, it's to the downside, but oil has relatively strong volume. Apparently, Ethereum is doing well as also. Oh my gosh, can I tell you a story? Maybe I shouldn't tell you this story, but there was somebody contacted me about doing a promotion that was related to Ethereum staking. And they had some other stuff. So I was unclear if it was really in the realm where I would feel confident in, making a sponsored video about the thing. So I was like, well, what specifically is it that you want me to promote? He answered this question before we waste our time, and they just replied back like, okay, well, I'll set up a meeting for this time and blah, 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 blah. And I'm like, yeah, okay. I haven't responded back to them yet. Like, it really, really rubbed me the wrong way. It's like, so you're trying to do that. You want to get me there in person so that you can, do all the convincing and everything. You don't actually want to tell me what we're actually doing until you have me in person. It really rubbed me the wrong way. So I probably will respond to them. I mean, now that it's a work day, but oh man. Then I read the report this morning that they were saying, when Ethereum goes to 2.0, the staking business is really going to take off.
Edwin Cruz says,
but
for explaining your session from this weekend. Vlad Stolkov says I ran 34. I think it's 4K monitor 100 Hz off a laptop single port Intel graphics Dell XPS 50.
Yeah. Let's see, from a performance perspective in terms of like being able to draw all of the pixels on the screen and being able to draw the charts, the video card is almost irrelevant, right? But when markets get moving and everything and you're like really using your system resources, not having a dedicated resources for your video can end up being like really detrimental to your performance. So I have always recommended that you have some sort of video card for any kind of computer application.
Using anything more than one app will hurt.
Yeah, it's a really weird situation that we're in here with trading, right? Because video cards are so expensive, but trading doesn't really need an expensive video card. It's nice, but doesn't really utilize it. Like when markets are really moving and
Sir, can you please explain me what is the use of video card in trading? Please.
No, I just answered that. Go back 5 minutes on the thing. It just all the video card does is draw the screen and draw the charts. I mean, these charts are using Sharp DX. Okay, so they're using video card. Yeah, I know, right? To ask him the same question. This chart is drawn on the video card. Okay, but is it really taxing on the video card to draw this? No, it's not. It's not. But if the rest of your system is being really slowed down, like your processor is being taxed because a lot of market data is coming in. A lot of market data is coming in and everything, and you're already using like max CPU and memory and everything. And then on top of that, the video card is also fighting for resources, then, you know, it gets pretty annoying. So I would really recommend that you get a cheap video card that is a dedicated card. I don't know. Somebody did ask me about this on one of the videos, but LS Trade tweets Bitcoin draws more scrutiny from regulators worried about fraud. This coming from the Wall Street Journal. As of yet, not seeing a move in Bitcoin, but could come.
Armin Sheehan says, do you trade YM?
Nope, I do not. I just traded in ES. Just kind of keeping an eye here on Bitcoin to see if it's gonna... None of these are moving. I don't know if that's... Well, I don't know. It's kind of odd. Bet they're not really moving right now. Regulators are signaling that they want more control over an expanded cryptocurrency universe. Yeah. See, these kind of headlines and how Bitcoin reacts to them is really interesting, I think, because it's good in the long run for Bitcoin to have more oversight, right? I mean, that I think makes it a more legitimate asset, and that makes it safer for investors to get in. That means more people could potentially get in. But at the same time, there is a lot of fraud out there already, right? And there's a lot of money that will have to come out when the regulation becomes more strict over Bitcoin. So even though it might be good in the long run, in the short term, it's definitely negative because the regulators are going to come in and a lot of these coins, you know, that are just outright scams are going to disappear. And that's going to be money out of the ecosystem, right? I tell you what, the E-mini is awfully constrained today. Peter Schiff. Peter Schiff, you don't buy gold to get rich, you buy gold to stay rich. Most people who are buying Bitcoin are doing so to get rich. The problem with putting too much money into something that has the potential to make you rich is that it also has an even greater potential to make you poor. Probably. Freight trading, you all right? Yeah, I'm doing fine. Need to get in the, I'm still on a rest day, but thinking I need to get into the gym and working my back. Okay, there's a little bit of an excursion on the downside there. And the Treasuries didn't stay in that 24 area. They popped back up. Like the buying continues. Let's do something here. See if we can play this, because this looks to me like possible informed trading, or oops, I'm not. I shouldn't even say informed trading. I should say this looks to me like a large meta order. And what I'm seeing at the moment suggests to me that the meta order is not done buying. So we should be able to sort something out. That if it was at 641, then right around when the S&P 500 opens, we might see another move up. Twitter seeks time to comply with India's new social media rules. Li Zhanzhao is trying to convince us that it's all lies about all of the awful things that China is doing. Oh my God, wait, what? So here he's got this thing that's like, here's a lie versus the truth about what China's doing. And they say, okay, the lie is Xinjiang forces Uyghur women to be sterilized. And then the truth is Xinjiang forbids late-term abortion. People can freely choose contraceptive measures. So they are committing genocide then, right? Is that, I mean, that, why is that your counter to that? You get what I mean? Like that has nothing to do with forcing women to be sterilized, right? Okay, these could both be true, right? There's nothing about this that contradicts this. Okay, Xinjiang commits genocide of Uyghur people, and the population growth of other ethnic groups is stagnant, and they say the population grew. Okay, but that still doesn't contradict the point. Like, the population could be growing and you could still be committing genocide, like, or at least you could be putting people in labor camps. I mean, because that is what they are doing. What do you think about Lilu's? Oh, I didn't know that they were doing a promo like that. I guess I don't really have an opinion. Combines are combines. The funny thing is, and I've never used Lilu, so that bigger question would be, what's their service like? Funny thing is, since progressive family... Well, I read it.
Uzi Knesset says the funny thing is, since progressive family planning policies result in dwindling populations, China can just say their progressive family planning policies is why the Uyghur population is dwindling.
Right. Okay. Xinjiang's de-radicalization measures are a political re-education campaign. Oh, Xinjiang did set up education and vocational training centers as measures to eliminate terrorism. Oh, so they do have re-education camps. Like, this is like really bad propaganda even for the Chinese. Like normally they just like straight up lie and stuff, but this is like nobody reading this would believe them. Because their points don't even. Okay, there is forced labor in the training centers. The courses in vocational education and training centers were to help the trainees master practical skills. The finished goods they made were not merchandise. Okay, so there is forced labor in the training. Oh my gosh. It's funny, but like it's also really disturbing at the same time, isn't it? That they would come out, they would be saying this sort of thing. Like there is nothing in this sentence that says that there's not forced labor in the camps. If anything, this is saying, oh yes, there is forced labor It's for their own good because they master practical skills. Did China get that on Fiverr? Yeah, I wonder. Okay, Xinjiang forces Uyghurs and people from other ethnic groups to work in factories in other cities outside the region. People in Xinjiang enjoy the freedom to choose jobs voluntarily. Their rights have been fully protected, and there is no forced labor in the region. Okay, so now they're actually making it. That was an actual contradictory statement, except for that what they're saying is objectively wrong. Like, we have pretty solid proof that that's what's happening. So 70% of cotton in Xinjiang was handpicked by the forced labor of ethnic people. He says the mechanical cotton picking rate in Xinjiang is around 70%. Okay, but that doesn't mean that people still aren't helping. Okay. People who voluntarily work as cotton pickers sign working contracts and enjoy handsome wages during harvesting seasons. Okay. Sounds like you still have forced labor to me. Chinese government carries out religious repression against Muslims. And then they say Xinjiang residents enjoy freedom of religion. Xinjiang protects against protects legal religious activities. So they do carry out religious repression. That one is like a tacit admission that actually we do. Oh man. Xinjiang forces ethnic minorities to change traditional cultural value, which is ethnocide. Yeah, that is. Xinjiang offers cultures in Uyghur, Kazakh, and other languages of ethnic groups. It is also promoting Putogua to help residents improve their capability to get jobs with higher incomes and better fit into society. Okay, so we are doing cultural ethnocide. Yep, Xinjiang sends officials to Uyghur families to monitor their daily life. Now, Xinjiang sent working groups to villages to help with local work and poverty alleviation. Oh, we did actually do that. We just call it something different. Oh my gosh. Xinjiang sent Uyghur children to boarding schools to separate them from their parents. Xinjiang is vast, and it was inconvenient for students to go to school. Since the 1980s, Xinjiang has set up nearly 400 boarding schools to reduce the family burden. The schools are welcomed by parents in Xinjiang. Yes, we do set up boarding schools and separate them from their parents, and they like it. So basically, all of these. What is the word when you're because it's like not rephrase but reframe. We did get a fill. Okay. So this one will be, how should we put it? I think that given the volatility and everything that we should try 4. So 1, 2, 3, 4. Okay. Let's see how hard they push down against this.
Uzi Knesset says China is only powerful in the sense that Western governments and business value cheap goods produced by slave labor. Once we change that, China has absolutely zero value to the world.
Well, I think that you have a good point in that we keep looking at China as a problem and becoming very powerful and taking over the world and everything. And the reality is that China's position is still very tenuous. They at this time, they don't really have the ability to project power beyond their immediate borders in any way other than through economic power, right? And frankly, right now, they're wielding their economic power more against their own success stories, like Ma, you know. So a lot of the things that I see China say these days are not the sort of things that I would expect somebody that is in a position of advantage to be saying. You know what I mean? A really great example is the whole Taiwan thing, right? Like, if I'm in a position of power, if I'm doing so great and everybody in my country is so behind me and I have absolutely no reason to be concerned about anything, then I just say, okay, fine. If Taiwan wants to be their own country, then let them be their own country. It's not going to be to their benefit. We're going to do better and we're going to beat them. But the reality is that Taiwan has just absolutely gapped China in every way. Even after the insane growth that China has had over the last 20 years or so, it's been even stronger in Taiwan. And there is a real threat to China in that because of Taiwan, it really kind of undermines their credibility. And so that's why they say all this stuff.
Uzi Knesset says China is literally only as powerful as a Dollar General. If demand for cheap shit shifts, China's economy on the global scale is a tick's ass.
Yeah. I mean, the issue is, the issue on that, though, is that it's not just crappy Dollar General goods, right? So much of what we build today is built in China, to the point that I think it poses a national security risk, especially when it comes to like pharmaceuticals, like how much of our pharmaceuticals are developed in China and things like that. You know, how much of our video card or microchip processing is done in China. Like, this is a problem. A lot of it is in Taiwan. Did you see this story the other day about the most sophisticated machine man has ever made? And it's this new type of lithograph machine to do more sophisticated processors and so forth. Yeah, really rare earth metals, yeah. Well, the thing that's interesting about the rare earth metals thing is that there are actually a lot of rare earth minerals in the United States and in Australia. In fact, I saw something that suggested that it was just as much, if not more, than what is in China. It's just that the environmental regulations make it very difficult to mine that stuff. So we're only getting it from China because they don't care about the environment right now. They're willing to, I mean, I don't think that it's like China doesn't care about the environment, but they're willing to harm the environment in the short run in order to gain a political advantage. Yeah. But point was, you know, go back to, let me try and make this point a different way. In the 80s, when Russia, just before the USSR collapsed, you know, people in the United States were very concerned about Russia. People in the United States saw Russia as a formidable ally or formidable antagonist, enemy, whatever, and we did not know that behind the scenes the USSR was just completely crumbling, right? I continue to read these stories about in China that they're just building cities. Like they're just building entire cities, and then like nobody moves into the city. And then like 10 years go by and nobody wants to live in those old units that they built. So they just build another row of condos, and then nobody moves into those either. It's like, and there's been some problems lately with the whole their financial system. They've been injecting money in and saving their banking system and stuff. Like China could be in dire straits, and we wouldn't realize it, right? So don't think that, don't buy into that whole thing that, because it could go downhill for them very, very quickly. And it would have a disastrous effect on the rest of the world economy if it happened too, right? But like just the Taiwan thing alone is kind of like, why are they so concerned about Taiwan if everything is great in China, right? It poses a severe political threat to the Chinese Communist Party's legitimacy. And that's why they want to get rid of them. Everyone except the Western world is young and numerous and ready to buy stuff.
Uzi Knesset says the illusion that Western governments care about the environment. We do green theater here and outsource materials and production to China.
Not wrong.
RJ Wheel says they've got bad demographics. Gus Magellan says taking a walk in the backyard just now made me think about the effect that short selling is having in the market since short selling became more mainstream, more known as a way to profit, lose.
Well, I don't think that there's very many retail traders out there, short selling things. So, like, honestly, like the thing that's silly is that it's the long short equity strategy people that are doing this, right? Because anybody else, why would you short this market? Like this market is so long. Like there's some significant risks there, I think, with how long positioned the market is, right? Like I don't think that there's going to be any kind of a collapse or anything. I did read some analysis from JP Morgan suggesting that the market is going to have to pull back a little bit here because the drivers that have been pushing us up are going to abate. And I think that there's a pretty good case for that. But I also think that the overall outlook is still positive for stocks and that they'll probably continue to churn up. But, in between all of that, there will probably continue to be short bouts of volatility. Now, I thought we decided that one wasn't Salim. That it wasn't Freight Train, that there was another such and such trading, and that was the one that we thought was Salim. Like everyone except the Western world is young and numerous and ready to buy stuff. That's not the way he talks. Could be wrong. I'm not going to worry about it. People start saying things that are disruptive, then we'll start doing something about it. But oh well, that is a Salim thing, laughing like that. Yeah, I guess there is still. I don't know. He isn't very creative with hit username. It could be that, well, I guess the other thing is that he's like using multiple accounts at the same time, which is a little frustrating. Kind of just makes me wonder again, like why he comes around. Whatever. Supreme Court. Schools must teach the value of free speech on the Hill. Because it clocks a chat. Well, I think that at some point in the future, there's probably going to be lots of spam in the chat, yeah? Nah, it's just kind of how things go. But we very much have the ability to ignore comments that aren't really relevant. I mean, in that case, he did make a comment that was related, at least. It's what point he was trying to make didn't really, I don't know if he made a very good, effective point, but it was relevant. Spamming eggs with some. No, we'll see. I don't know. The thing is, we're getting close. We're getting close to the point where it's like the really key foundational videos that we want on the channel. We're getting close to finishing them, and then we are gonna start making more general content. The stream will always be about trading, but when we start making more general content, you're probably going to get a lot of weird people in here. Did you really get that? You really get a winner off of that trade? Well, yeah, I guess it's not that surprising. It's just been awfully quiet, Ace. I feel like you got off lucky on that. we got a report here in 45 minutes or in 15 minutes, so keep that in mind. Well, that's a pretty strong opening buy, isn't it? It wasn't like huge in volume, but hey, they definitely moved. Look, there's the Treasuries moving up again. You think you try and weather the open? Okay, so I got one filled, and I got my average position down to 20, my break even rather, back down to 24.5, which it does look like there was some favorable excursion against me, right? Because I got in at 26, it went down to 25. Wait, why is that? Oh, that's MFE. MAE is 3. Yes, okay, that's correct. So good. I got that position to what my average excursion was against me, which means that I judged what spread I need to put on my trade correctly. And now I should be able to let this hold and watch this meta order to continue coming through. Yeah, so the E-mini did see about 2,000 contracts change in the run-up to the open, probably the trade that Ace got a winner on. But the volume on the open hasn't been very... Yeah. I guess it's yeah, KZ says, good job, Ace, yeah. I think it was a good job, though, the trade that you took before the open, but I'm just stating that I'm still a little nervous about taking a position in the E-mini at the moment. But it's like it was for the same reasons why I didn't take one before the open. And he was able to catch a winner out of it, so who knows. The exit to just take two was the key. Yeah.
Ace Trade says at RJ Wheel at UZI Knesset thanks. Obviously I need validation constantly. Lol.
Well, we're concerned because every time the thing that's coming through is like every time that you take it, I'm like. The problem is that I still have with that whole thing is that like he told me how he did his strategy, and I was trading it and I did well for a while, but then I had a blowout off of it, and some back testing has kind of been inconsistent with it. So, but then like my understanding is he's changed what he's trading. So like every time that I see something like that, I'm like, well, he might just be getting lucky. Like, how do I know? And especially when he does something that seems like in action that's pretty meh. You know, there's not like a really key driver to be moving us somewhere or something like that. So that's why I have these mixed feelings about it. You can make money off Michaels, or you can... Well, I'm not going to follow, no. What analysis do you think institutions use most often these days when entering their trades? It depends on the kind of institution. But I think that the fundamentals and non-market data is implemented in those strategies far more than retail traders think. If I was to point to a difference between what the institutions do and what the retail traders do, I think it's those things. Like when I worked for one of the big banks, their whole thing was being able to price using fundamental models to price everything. So that, and then looking at their stock, you know, so they would say, this company, they own this many mortgage-backed securities. If interest rates just changed, then the mortgage-backed securities should be worth this. Ergo, this company is worth this. And then they look at what is the market doing compared to that, and like what are the trends, and that's how it determines which way to take the trades. And a retail trader doesn't do that. They just say, what direction is it going? I'm going to try and ride the momentum, right? See, there's that. Yeah. See, I feel like my hesitancy was correct there in the E-mini. Because they started out on a really great pop, but then it really turned down. We would have been going long, right? So I can wait until, but after the news, depending on the news, I might take a long. Yeah. Hugo Guy, it's going to take a long time, I think, to get back to normality, and I certainly would be surprised if we got back to what most of us would see as a kind of status quo before the pandemic by the next spring. What? Oh, man. Like, to me, and where I live, I think we already are back to normal. Okay, so remember that FOMC meeting, and there was that huge spike up in the yield, and then it came back and it went lower eventually in the 10-year? Well, the top of that spike in yield was 132.30. So they're bumping up against significant resistance, and you see a lot of orders there. If we go through that, I wonder. Well, and the pretty strong buying in the Treasury as the E-mini is declining.
Freight Train Trading says, I wish I could stay for 2 hours in a trade.
Well, you definitely tend to make more money if you have you stay in trades longer. There's some real advantages to staying in trades longer. It's a completely different kind of game, though, right?
Uzi Knesset says, back to normal is just a carrot on a stick.
Maybe. This is where I keep saying, like, where I'm at, it's normal. So how do I judge that? Especially how long it should take to get back to normal in the UK. There was a study out this morning from Israel where they showed that the vaccine had, I think it was a 60% efficiency against the Delta variant, which is a lot less than the like 80 or 90% efficiency against the other strains. So, yeah, that's interesting. So the carrot on a stick thing, like there does appear from the data to be enough of a difference with this new Delta variant that it could be a concern of it coming through again. But when you look at it, the Delta variant, even though there's like more cases, you're not seeing this uptick in like deaths and things like that. So I think that there is reason to be concerned that some places may continue to keep things locked up. But overall, it looks like that we should be okay. Like, I don't see anything that makes me concerned for public health, you know? And it kind of makes you wonder, because the United States did not get to Biden's vaccination target of like 70%, right? And you got this Delta variant. Like, Delta variant is just one variant. There's going to be other variants. Are we going to have problems like mandatory short shutdowns every time that a new COVID variant comes around? Because COVID is not going, yeah.
Uzi Knesset says variants SH variants, COVID isn't going anywhere. The companies that manufacture the vaccines know this. It's people tied up in the politics of this whole debacle that don't.
I think, well, maybe you're right. Like the thing, there's going to be variants. And the question is, are politicians going to come in and continuing to implement extraordinary measures over variants like the Delta variant? Because it seems to me from the data that the Delta variant is a little overhyped, you know?
Uzi Knesset says when the hype finally does die down, COVID shots will just replace flu shots.
Well, that is what's going to happen. There's going to be a yearly vaccine change. Right? How volatile are the ISM? Well, so normally ISM isn't like a huge mover, Well, so market in particular usually isn't a huge mover. ISM is typically a little bit more significant, but still isn't like, it's kind of more medium impact, right? But given the context of us coming off of a long holiday weekend and the ISM probably giving us some insight into the big questions that we have from the jobs report, I would expect that these reports will have a fairly important impact on the markets. Now, this move that we're seeing here before all of that, though, kind of has me a little like, So you can see there that the 10-year has broken past that resistance. There was resistance at 330. A good number of contracts traded there. After they traded through it, you did see a stop run, or at least what I would call a stop run. It moved up 2 ticks just real quick, So I don't know if that means they're done. Certainly, I can say I'm happy with my results, right? I got that trade correct. And that particular trade, I haven't seen a lot of them, and certainly not in the Treasuries lately, but that is the trade that I really truly want. Is I see the large meta order, I know that it's big enough, and I can take advantage of the inefficiency. So the question now is, how far can it go? Now that they've broken that, how far can it go? The next step up is like way up there at 133.06 half. So that's a little bit too far, but also we're seeing some strengthening in the dollar come in here too. So given the levels that the E-mini fell down to after that initial pop, I think buyers are coming in buying the dip just king. I have no clue, neither does. Well, that's not true, Ace. So the way we should think about this is theory, and then what evidence do we have in support or against that? So in the S&P 500, the cumulative delta since that opening trend up has basically wiped out the delta from before. And we are well below seller's average position. I don't see any iceberging. So I don't see any evidence to suggest that people are buying the dip yet. At some point we'll probably see it, right? So probably the more interesting question is, are we seeing a large sell meta order come in? Could there be more downside? Well, the move that we had so far was washing out the delta that we had from just before the open. So I'm going to say probably not happening yet. Like, they could continue to sell and we could see more sellers coming in, but that first part of that move was people getting washed out. So I guess if we knew why it was going down, well, okay, so first of all, I didn't hear anything from, did I not have Financial Juice open here? Okay, they got 64.6 versus an estimated 64.8. So that market number looked like it was in line. Yep, and 63.7 versus the previous 63.9. Okay, so the market numbers did come out and they were all in line. So we're going to have maybe hold off until the top of the hour. Freight train trading says so, question mark. Well, it suggests to me that if we had a reason to actually be short, like if we knew that this move down was informed trading and we knew what the information was, which at this moment I don't. But if we had that, then it would very much be worth it to try short, especially now that we're kind of retracing a bit. But what I see, that move could be explained by positioning. If we get some negative numbers, the market may well become very volatile. Yeah. And the way that the treasuries, I mean, that could be it, right? So if we come in through here, well, I'm telling you guys too much, but I think that's kind of like because I got mine. So what could be a reason for this informed trading? Well, it could be people trading ahead of the ISM. Could be that they believe or know that the ISM is going to be bad and they're front running it. So what happens when that comes out at that point? Well, then it's a question of how priced in did they actually get it? You know? If it comes out and it's negative, though, it probably is still worth taking a sell. I'm watching these treasuries that has me all sorts of, kind of gives me some anxiety, to be honest, when I see the treasuries moving like that, because it means that like they're concerned about something. Like that kind of a move doesn't just happen very often. Are we seeing any other kind of moves here? Kind of suggest not in currencies. So another thing I want to point out. Yeah, I am deep in the money. Thanks. So we've seen lately a lot of positive correlation between the S&P 500 and the treasuries, right? But today it's an inverse correlation. Like even though the yields are moving up, the S&P 500 is selling. So based on that, like what are the possibilities, right? They could be that there's just random, but it could be that the treasuries are buying because they're concerned, and that's the inverse correlation. Something bad for equities has happened and people are fleeing to bonds. And given the move that we've seen in the dollar kind of supports that as well. So we just kind of got to watch the PMI. The PMI could be the piece of the puzzle for us to figure out what's going on. I suppose that another possible reason for this could be the pessimism overseas about the opening that we're kind of reading that kind of got us on this subject that we were talking about with vaccines and so forth. Oh, wow. So now they blasted through 133 even as well. Full gas trend day on Europe spun. Yeah. You know, this is a good point. The bonds were bullish in the European session as well. And in fact, I remember News Squawk pointing that out. In fact, let's go and read that. I'll show you what they were saying about it. US Open rundown. Okay. 10-year JGBs traded lower amid a similar lackluster picture in T-note futures after a slip beneath the psychologically key level 152 level, while support from the firmer results at the 30-year JGB action was only brief, with price action not helped by increased corporate supply as Nomura, Mahizo, and Zyoma plan USD denominated bond offerings. And then down in their part on fix, they said, once again, frantic moves in FX may mask, if not fully overshadow, what has been an arguably just as impressive revival in fortunes for debt futures as the dollar, given the fact that bonds are now approaching 173 from the just a tick beneath the half round number below, while gilts have extended their rebound from only 3 ticks above 128 to 128.37, with some assistance from a robust 2031 DMO sell awaiting the 2061 offering. Similar recovery in U.S. Treasuries ahead of the return of cash markets from the long weekend and a fairly busy agenda, including the final market services and composite PMIs, non-manufacturing ISM, and employment trends that might hold more interest than usual in view of last Friday's somewhat conflicting BLS update. So, like, they were kind of seeing something in the bonds in the overnight session anyways, but it really came in strong, and realized that it was like when it did this first one and then it came all the way back, it was kind of like, well, okay, that might be like post-market pullback. But then the way that it was behaving after that, you know, I'm not sure I can quite put a finger on what it was that made me feel like this, but I made the call, and remember I said it when I took it, that I think there is a large buy meta order coming in and that it's not finished. And we just happened, I mean, I didn't really think about it when we took the trade, but we just happened to catch a meta order that was going into some key resistance levels that have created some good stops above us. So we got 5 minutes to the news. I mean, that 133.06 half target, which was from June 11th, does not seem so crazy at the moment, does it? That is only 6 ticks away. And if we got past that, then, oh boy, like what then? 200-day moving average at 133.24 or so? Like, now look at that strong bid at 30. Well, so for the E-mini, I may try and take a trade here based on what the ISM does. But for the Treasury, seeing that big stack and how it's behaving, this is making me, okay. So we're getting some signals that the book is reaching its limit in the Treasury. So I'm going to take it off at 04. So wait, what did that end up being? Oh, it was more than 250. It was at 359.38. Good job. Almost 20 favorable ticks. That is one of the largest trades I've ever taken in the 10-year Treasury. I'm quite shocked. Oh man, look at how far back we came too. Wow. Okay, and 03 half did break. So I think I made a good call there. And getting out before the ISM. So I don't necessarily want to deal with the volatility in the Treasury. In the E-mini, it might be a different story. Like, let's see here. So there's yesterday's low at like 43.33. So if ISM is like really bad, then we could see more downside. I don't know if I'll be able to take advantage of it, but it's there. It's a thing. Now, in other news, Jay has not taken a trade. I should check here real quick just to make sure, because I do see some spots that might have been, they're kind of like borderline. Maybe they could have taken a trade. It's all about that meta order. If you really know that one is coming through, yeah. The difficulty is that it can be really hard to tell. You know, like I was going back. I did say I think there's a meta order and that it's not done, but I can't completely put a finger on why I knew that. So maybe it was just luck. I don't know. And I think the market is expecting this ISM number to be bad. It really looks like, okay, so the big number is non-manufacturing PMI. They're looking for a reading of 63.5. And that's the only one with an estimate, but there are prices paid and new orders and stuff that would matter too, especially prices paid previous was 80. Freight train trading says maybe it took time for it to be done. Well, you remember the whole point is that there are market inefficiencies. And essentially the market inefficiency is that the large meta order can't execute all at once. If they could just buy it all at 133 even and be done with it, they would probably take that happily. They revise it. Well, that's just the estimate that Financial Juice is giving me. What do I get over here? 66.3 over here as well. Oh, no, yeah, non-manufacturing on this one is 66.3. Over here, they're looking for 63.5. So there's a pretty wide range of estimates for this one. Okay, the Treasuries really pulled. Okay, so it's 60, so it is lower than the forecast. The Treasuries are moving a little bit higher. Okay, so 60.1 was a lot less than the estimates, but that's not necessarily like a disaster number either, because these are anything above 50 is still positive, right? So I'm kind of wondering here. So the E-mini is very much on the edge. You know, like they could go down for a little bit more, but like they backed away from it. So I'm not so sure that I have a trade here in the E-mini. I probably could have stayed in my trade in the 10-year Treasury, but I got a pretty good exit there at 04. And I think that what we're getting on here now is the people trading after the news and not the thing that initially got me into it, right? Because if these guys were buying it because of the ISM, and I think that that's a pretty good guess, you know, they're probably going to be taking profits up in here. So let's see what kind of a range they develop here between 05.5 and 03 or so. Flaccid buying on NQ, dangerous, can't trade that. Yeah, well, it is flaccid. I would say that. That's like I wanted to try and catch something like downward momentum. I don't know if, well, maybe it's too late now. So we should come back here while that's going. I'm just going to let that one play out. We should come into this ISM report and see if we can read it, if we get anything out of it. Okay, there it is. Manufacturing PMI at 60.6, June 2021. New orders and production growing, employment contracting, supplier deliveries slowing at a slower rate, backlog growing, raw materials inventories growing, customers inventories too low, prices increasing, exports and imports growing. Okay, so this is a stagflationary report again, is really what's going on here, right? This figure indicates the expansion in the overall economy for the 13th month in a row after contraction in April 2020. There's all these numbers. Business Survey Committee panelists reported that their companies and suppliers continued to struggle to meet increasing levels of demand. Record-long raw material lead times, wide-scale shortages of critical basic materials, rising commodity prices, and difficulties in transporting products are continuing to affect all segments of the manufacturing economy. Worker absenteeism, short-term shutdowns due to parts shortages, and difficulties in filling open positions continue to be issues that limit manufacturing growth potential. Optimistic panel sentiment remains strong, with 16 positive comments for every cautious comment. Demand expanded. So you see what's going on here is they are saying things are slowing down a little bit, but in particular, the things that would indicate that employment is getting better and that the Federal Reserve is likely to raise rates, it's not there. The employment continues to be struggling, and that they're continuing to have difficulties in getting people. So hence a really strong reason for the bonds to be up. And I suppose that when you look at it in that context, that is kind of what the previous manufacturing reports were giving us a week or two ago. And that's also in line with what we got from the employment report, right? The unemployment number ticked up a little bit. So I think that the ISM, that the Treasury was trading up based off of a play on the ISM. The issue now, and the thing that I can't tell, is what is a fair price for the Treasury now that that's over. I obviously could have helped that, but I decided to get out before the news. I don't think anyone should trade the news. Well, the trading after the news can be good trades. Certainly, you got to be careful about holding. If the liquidity is pulling, you probably shouldn't have a position on. But look at the Treasury. Yeah, Uzi says, "Damn, look at it go, man." That is well above the 133.06 half now, right? That was kind of the thing, was like, okay, well, there's a target. I don't know if they can actually get through it. Now that they've blown through it, it's next like high pivot is 133.23 half. Much too far for one day. I think what I saw here was like 05. That was like the end of the meta order. What we're getting now is the news traders following in after it. So surely these guys taking some profits, but how far is it going to go? Like, what is a fair valuation now? They're just pummeling sellers, yeah.
Block.
It's not like there's not volume coming through. Well, look at that. It's 4K to sell it. Now, in the E-mini, they did break lows again, but it wasn't as dire as I thought it would be. Trying to think of what our titles should be. Labor market remains tight and wages have risen at an unprecedented rate. We're expecting a long-term effect on the pricing of services. See, so cost of things is going up. People aren't necessarily getting jobs. Hot damn, the market lives. We haven't seen a move like this in Treasuries in a long time, have we, Uzi? Like a real, true, honest to goodness, like trend day. Ace wants everybody to sell behind him, huh? Yes, Forex Live says the message from the underlying ISM services data is margin pressures, shortages, and inflation, not economic slowdown. I think so. In other words, there's strong reason. In fact, I'm just gonna. In other words, there's strong reason for the treasuries to have moved up, but not so much of a strong case for the S&P 500 to move down. Oh, I didn't see that thing from Freight Trading about, say I have a 30 tick stop loss and a 60 trail target minimum on NQ open. What do you think about my risk management? I don't think that really says much of anything about your risk management. Like having a stop and a target is like the most basic way of handling your risk. And whether that's going to work out or not is going to depend largely on your signal and if you actually have a predictive edge on that. So the thing that would tell you much more about your risk management would be how well you are able to hold to that. And if there are times when you change those things, how good are you at that? Where when you look at Ace, what seems to be so impressive to me is that he takes profits and often will just take the position off on a small winner. But then he's still able to catch really big runners as well. And I don't know if even he knows how he tells when to do which. I think Uzi's good at this as well, actually. But because he's situational, I mean, it seems like he is. But you never hear him say, well, I'm taking the profit here because there's just not enough activity or whatever that, So if he has a reason, he's not sharing it with us. But I think that he just kind of can tell. I mean, is there like a specific Ace? Do you have like a specific new metric or number that you use to decide whether you're getting out or where you're taking your profits or anything? Or are you just feeling it? Everything you've said to me gives me the impression that you just feel it. He has more money than Bezos in history. Freight Train Trading says, why wasn't there much of a good reason for ES to move down? Okay, so to review, what we saw in the ISM was inflation, continued difficulties with employment, but not a slowdown in activity. Okay, which means that the economy is still growing and is going at a good pace, but the metrics that the Federal Reserve looks at to determine interest rates are showing that they're not seeing the employment growth that they want. So the Federal Reserve is probably not going to raise interest rates anytime soon. But and while this is slightly bad for equities, it's overall still good, especially if it's like we're still growing, and especially if interest rates stay low. That's good for equities overall, right? So that's where we get, okay, there's a strong reason for the treasuries to move. The equities are going to be much more constrained, and if anything, they might reverse back up. Taking profit is the main thing. They put money in the account, move the last contracts to break even. Don't cry if they get. Well, yeah, that's another issue, though. That's how do I say this? So, like, if I take one contract and I have a 16 tick profit and a 32 tick stop, as we complain about so often, then I'm going to tend to get a really high win rate, and I will probably make money in the short run, right? But there's fat tails on that, and so we have discussed many times, that's not necessarily a very wise strategy. It catches up with you. Okay, so then what do you do? I've already explained why ZN is moving up 3 times. I'm not going to go into it again. And unemployment is not really changing, so the Federal Reserve isn't going to change their policy. Okay, so this taking on risk strategy, there's significant problems you're going to likely to blow up. So what can you do instead? Well, what you can do is you can hedge that risk by taking advantage of time. So if I have trend going with me, and I can take on a lot of risk for a very short amount of time. And then if I make money on taking that big risk, then I can use that money that I've developed to hold for the larger profit, right? And then in the end, hopefully, that reduces my tail, essentially, okay? Because you're not as prone to like the full stop out anymore, right? The only way that you get the full stop out is if it like immediately goes against you, right? And you notice that Ace has targets that are, he has one target that's like a point and then one target that's like 2 points. So he's quite likely just from the noise to get those targets, but he's also taking it with some degree of trend. So I think, correct me if I'm wrong, if it goes 2 points against him, he stops out, right? So where you would get a tail where like the trading ends up being really, really bad is like he stops out on the full clip multiple times in a row, right? Unlikely to happen. And so that reduces the tail, right? Unlikely to happen because he's only in the full clip for a short amount of time, and he should be getting those targets quickly. And if he doesn't, he will take it off. Right? So there is a significant degree of risk management to it because what he's doing is taking on risk. Like a big part of how it makes money is taking on risk. Right? But there's this other side to it, which is how do you manage the winners? Because in a system like that, I could write something that's algorithmic and would break even roughly on a trade like that, okay? Where the profits are derived from is how far you let your winners go. And Ace seems to have the ability to really let them run. And I can't figure out how he does that. It says small paper cuts. Well, I mean, if you stop out on the full clip, that's not necessarily a paper cut. You know, like if I was over here and I was trading 3 micro contracts for 2 points and I got stopped out on it, that would hurt. You know, that's like $60. And especially, you get what I mean? Like, is it 2? Or, oh yeah, he only takes 2, not 4, so $10, $30, right? I mean, he doesn't have to share. I am 2 points, yeah. I was reading because I'm normally going for 4, so I was mixing it up. You don't understand, Ace. I am not as interested so much in how exactly you do it, because if somebody wants to keep that private, then they should, frankly, and I can come up with my own signals. But what is more interesting to me is where can retail traders actually develop edge, right? So there's kind of this whole thing about technical analysis where it's like, well, can you really gain an edge in today's market using a single price time series data? And from what I can see, it's really hard. That if you like take equal risk reward and you want something that wins like 50-60% of the time, it's really hard to find that. So, I would share, but you have convinced me the market will really. Yeah, I don't think you should share it in the stream. I don't. You can tell people in private messages, but once you guys are trading more than in aggregate 500 contracts, you have a problem. Depending on the situation. Right. But it's more of like, where is the edge derived from, right? So when we're looking at Ace's trade, we're more interested in what can you tell us about it that would let us know where the profits are being generated from. So if you come in, you lose 2 points. If you lose, you're going to lose $30, right? Okay. Then if you win, and then if you get the first target, which is 1 point, okay, then you make 15, right? This one time I gave out part of my edge and someone put on muddy boots and stomped all over it. Well, so hold up. Well, let me finish this and then I'll get to that. Okay. So if you get your first target, you get 15, right? If you get your second target, you get 30. And then if you get more than that, it's who knows? Who knows how far you go, but you could get the plus, right? Bye. So what are the probabilities of these particular things happening? Well, the probability of if we ignored this for a second, okay, this should happen 55% of the time, and this should happen 45% of the time in like a random market with a random signal, okay? But this is going to happen a certain amount of the time too. So I'm going to say, let's just split the difference. And let's say that this happens 20% of the time and this happens 25% of the time, okay? Right? So under those situations, and then there's going to be another one. We'd have to say, how often does it go? Well, that's the big question, right? So maybe we take 10 off of those. Let's say this happens 10, this happens 15, and this happens Actually, what would be more realistic? Let's say that this happens 10, this happens 10, this happens 10, 30, we still got 15. So let's do, let's say that each one of these are 15%. 15%. Okay. Did it go shorter? Yeah, I got out. It was fine. I didn't pay attention to it. Okay, so again, negative 30, 15, 30, 30 plus. And we're going to say this is 10, 15, and 20% of the time. So, okay. And this is 45% of the time. Okay. Let's do some math. If there was 100 trades, then we would make 30 on these, right? Or 30 plus. Let's cancel. Let's leave that part to the end. Okay. Now you see where my mental math isn't good enough. Okay. This negative 1350. Okay. $300. $150? Oh, 15. Wait, 30 times 15, not 30 times 15, 450. 450. Okay. These two together are 750. Okay. So 1350 minus 750 equals 600. So from this, I need to make 600 or more to break even, right? Well, if it was 30 times 10, that wouldn't be enough. So, you get what I'm saying? With those probabilities, now maybe his probabilities are better in some respect, but oh, actually, you know what? So we should go back. Let me do this again because I think I'm at this is negative 30 times 45 trades, and then this one where we make half of it is 15. Yeah, it is 15, and then this one is we do make 30 per clip. Oh no, yeah, no, I had it right. Okay. So basically, you got to make like 600. All right. It's been a long time since I hit 10 points. But let's say that you do hit 10 points, right? If you hit 10 points on 3 of those, then that's like $600 all on its own, right? Because, well, no, 20 points is $100. Or is it thousands? So, or we're doing micros. Yeah, I did this all in micros. So 10 points would be $50 per contract times 3. It's $150, right? So if you were getting 10 of those, then you'd only need this to run like 4 times, and then you'd be in the money, right? Makes sense? Okay. So it says 30 plus is what matters, right? Okay, so going back to it, all these shit all over it. So the issue is you come in and we have a strategy that's based off of like a moving average crossover or something like that. And we say, okay, moving average crossover has some edge. Does it really actually have edge? Because I say that the edge in this particular case is derived from the runners. And is the crossover giving us a probability of detecting that it's going to run? No. You see what I mean? Whatever it is that Ace is using to determine that it's going to run and that he should leave the contract on is probably where his profits are generated from, based on what we know about his system so far, right? And it's not that I'm trying to shit on the system. It's that it's really important to understand where the profits are generated from if we're going to try and say stuff to other traders. You know what I mean? Because what will happen is I'll come in and we'll tell people that, and we'll say, oh yeah, I'm trading a moving average crossover. So then all of these traders say, oh, if I just trade a moving average crossover, I can make money. When the reality is that the moving average crossover is random, frankly, random, and the edge is from somewhere else. And if I was going to teach somebody something to help them be successful, it would probably be the thing that lets me know that it's running. You know what I mean? Right? That's the thing that's actually valuable. The other part is random. And I think that it's important for us to understand that. A lot of traders that are successful don't. A lot of traders that are successful don't necessarily know where it's coming from, because there's so much complexity in what they're doing. So it's not shitting on your strategy. I'm just shitting on the idea that trading a moving average crossover has efficacy. That part, I guess I am shitting on it, because I am very skeptical of the idea that you can trade off of a single time price series analysis and derive an edge just from that. I haven't found a floor yet. Well, where did I get short from? 33. Oh, okay. It came down a good clip. They just waited for me to get out. Given the circles, there's no circles about what I'm saying. I know that you're probably joking about that, but it kind of irks me to see that, right? So like when we come in and traders as a community overall, I'm not talking about us, but like the trading community overall, let me look at the camera, the trading community overall, and we have discussions. And what is really the argument? The argument, it tends to be, does technical analysis work? Well, it's not really a useful question, to be honest. The real question is, are there market inefficiencies that I, as a retail trader, can take advantage of consistently? That's the real question. Okay. So then if there is a market inefficiency, and what is the kind of analysis that I can use to identify and take, and then what are the strategies that I can use to take advantage of that market inefficiency? Okay. So when we have a discussion, it always comes down to, okay, does technical analysis work? Well, I just trade a simple moving average. Ergo, technical analysis must work. Well, if the strategy that you're trading, its edge is being derived from how you manage the risk of the runner, then the entry doesn't necessarily matter. In fact, you could pick a completely random, you could have a random number generator randomly generate for when you want to get in. And you could still make money, assuming that you have a real edge on how you get them to run. You get what I mean? So here in the discussion, like, does technical analysis work? That's not an answer to does technical analysis work. So the real question should be, what are the inefficiencies? And it seems to me that the inefficiency or the edge that he gets isn't from what he shared with me, right? So then the question is, how is it derived, right? So if ACE is using purely quantitative methods to determine whether to let it run or not, wow, that's a pretty good downside now. No successful trader trades one moving average? Probably not. Okay. If he has a purely quantitative system to determine when to hold them, then that would be a significant discovery. You get what I'm saying? If he is able to, from a quantitative means that I could program on when to hold a trade or when not to, that would be a significant discovery. That would be something that he could turn into a hedge fund or something like that, right? If he can just tell, then we see people that do that, but we can't necessarily explain how they do that. And we should consider the probability or the possibility that they are incorporating other information and analysis other than just the technical data from the market, right? Half of my guy to see me that texts me. Well, I guess I was, well, yeah, the way that I should take this on this move in the E-mini. So I was saying, well, the downside in the E-mini is probably not as, or at least the trade in the E-mini isn't as strong as it is in the Treasury. And it looks like we've already overstayed on the Treasury, right? Well, should I have taken a trade on the E-mini? I think that I could say that I probably should have. So I think that my call on that one was wrong, right? That it's not as good of an opportunity on the downside in equities. It looks like after they kind of sat around and waddled around for a little bit, it did end up turning into a short and significant amounts of volume as well. About 4,000 contracts. Okay. Now, at this point, we can ask, is the meta order over? Well, right there at that exact moment, I'd say probably not. But how much more? Is there enough to get another target in this? I'm not sure. Kyle, oh man, I didn't get the notification today. Feels, oh, really? Do you have like all notifications turned on? Hedge fund sounds fun. Rent a retail space, business license, get my broker's license, hire people, W-2s. Well, what makes you think that you would have to do all of that part, right? Like, frankly, the way that something like that could work is you give them the edge and somebody else manages it for you, and you get a cut of the profits, but that you're not the actual portfolio manager. I mean, you're talking about all of those things, but then like the other side of that is that you will live in a multi-million-dollar mansion and have 6 Ferraris and right. Like understand if you could prove that you have a quantitative way of managing a runner that has efficacy, and you could either start a fund out of that or write a paper about it, that would be like groundbreaking stuff, right? But I think it's more important. Suddenly the CFTC is wanting to, nah, you wouldn't be doing anything. You wouldn't be doing anything wrong. You'd be running a good business. And frankly, you would be doing more. To translate that bit of speak, he wants to start a hedge fund, and then I wish that I had the experience to start a hedge fund, but I definitely do not. Okay, but think of it this way: if you have the ability to do something like that, and it would make the markets more efficient, and it would enable people to generate higher returns. So as you can have a more positive impact on society by going the full Monty and weaponizing it essentially and turning it into a hedge fund. So for me, if I had an edge that was to that degree, I would be shopping it. I would be trying to turn it into a fund, because that would be where I would be able to have the greatest impact. And I would be able to, because the thing that I really want is I want to, like when you talk about the self-actualization pyramid, I've already, I feel like I already have all of the things, so to me, what is the next step on the pyramid? I think that the next step on the pyramid is moving outside and helping other people on their pyramids, right? So if I could run like a whole fund and like multiple people were making their living off of the edge that I had discovered, I would do it 100%. That's because, I would like employees. That would be nice. Right? But we're still somewhat, having employees that, well, I don't think it's as nice. I think it's my duty to society is what I think it is. I don't know. Mini is showing a little bit of reversion here. How much did it trade down there? Now is probably a good place to have like our volumetric bars, huh? Okay, so there was some absorption down at the bottom, but it wasn't super significant. $30-minute bars, 4 ticks per level, 4K, yeah. So there's a significant amount, but there was a significant amount at 43.27. So I don't know. But more to the point, this and this is really the thing that I'm trying to say to Ace is that if that is where your edge is coming from, then what would be the more useful thing to say in chat, right? More useful thing to say in chat wouldn't necessarily be enter here. The more useful thing would be it looks like it can keep going. I'm still letting it run, right? See, like this whole thing, I could come trade for a few hours in my pajamas and then catch hungry trout the rest of the morning. If that was my life, I would not last long. That isn't actionable information that looks like it keeps going. It is. Don't you understand? If that's where the edge is really from, I guess it's not necessarily helpful for somebody that's not already in a trade. But if you're already in the trade, then the answer is hold on, right? Is there a market like NQ that I can trade on the US Open, volatility, YM, DAX, or CL? What do you mean by that? The question makes no sense. Yeah, there's a market like the NQ. There's the NQ. When I was first starting out, I would have killed to hear someone tell me when and where to and which direction to get in at first, just to make some money. Okay, but do not. But I'm suggesting that you could probably write a robot that just randomly picked, and it might do as well. You get what I'm saying? That's kind of the contention. I'm not saying that that's proven, but that's kind of the theory. Like the theory is that the entry is random and that the edge is in the letting it run. Okay. So let me put this a different way. I think that I have some things that do give you an edge with your entry. That is to say, I have some strategies that on the back test, you are getting 55 to 60% win rate on equal risk reward. Right? There's something that I think is, I wish I had more data, then I could maybe empirically prove it, right? But I have some data to suggest a real entry and exit edge based on order flow, right? So it would be a more effective strategy to use one of those and then use this other system to determine how long to hold it, is really kind of what I'm thinking. I want to trade an open like the US. I mean, another open. Oh, well, you probably, there's either going to be the Asian Open or the London Open, right? So if you're going to trade the Asian Open, then you're going to trade the, what is the name of their index? Or no? London Open is probably better. London Open is probably closer to your time too, right? So to trade the Asian Open, you have to wake up really early. So if you want to trade the London Open, then you trade the DAX, right? Okay. It says, that's great, brother. That probably works. I'm just saying that if I was his green as grass, I would have appreciated somebody making decent calls. No, I don't know if I don't think that that's true, Ace. I don't actually. So let's think about this for a second. So if you're new and you're just following somebody else's trade, getting in and out, and you don't know how it works, are you really actually learning anything? Are you really actually developing edge? You get what I mean? Like it's a crutch that in the end probably does more harm, especially if the signal that you're getting doesn't actually have edge to it, right? Because then what you've done is you've conditioned yourself based on data that is essentially random. Right? I think the thing that helps the beginning trader is for them to understand that the vast majority of what people say is random and BS, and that you really need to find things that you can really prove have edge to them. And then spend your time learning the trades that they're actually worth something from the beginning, and spend your time learning how to search for edges, right? Because what'll happen is You go in and you're going to trade, and maybe you make a little bit of money following ace, and then ace dies, and you didn't know how that worked, and you haven't developed any ability to develop your own strategies, and now you're just X years behind learning how to develop your own strategy, right? You understand what I'm saying? Yeah, Lucas says, I regret not following these trades at the beginning. Could have used the capital or more than the knowledge. Well, so I think that we can use myself as a direct example, right? I followed his trades for a period, and then we came into some market volatility, and I fell flat on my face, right? And then he explained how the entry worked, and I tried trading that by hand, and it came into a period and I fell flat on my face, right? Now think about, what if a year and a half ago he had instead shared with me how he lets them run, assuming that that's where the edge really is, right? Then how much further ahead would I be? You get what I mean? Like, if there's not an actual real edge to something, then it's not actually helping people. And if they don't understand that edge, I don't think that it actually helps people. Dies in a horrible fiery car accident or something with the washing machine lid not being shut. I think that if either of us, now this is getting morbid. I don't know if I really want to talk about this. I think that if either of us died, it would be like cancer. You know, like we would develop this crazy brain cancer in the course of 6 months, and then all of a sudden you're gone. I can't see buying one seriously. How much? No, they give it to you, actually. I know it's difficult to buy these things. You need 10K to trade on a DAX contract? Well, there's not micro DAX. You could certainly trade oil too. Ooh, is it going to go down for another leg? I'll be so impressed if it goes down for another leg. Nah, not how it's moving nowadays after they changed the tick size index. Oh, really? Okay. I mean, from what RJ Will was saying there earlier about, yeah, just risk on, risk off, uses other filters to know when to drive it or park it. I mean, probably. Like, I don't doubt that it could be really simple. The indicator itself might be really simple, and it might be more of the strategies and how you set that up. Because, like, when you're doing if I'm doing this programmatically, like, how do you do moving targets, right? Because the way that I do moving targets, I cannot program that. I've tried. Right? Because what I'm doing is I'm looking there and it ticks up and I go, okay, that was a pretty strong uptick. I'm going to move it up a little bit, you know? And, like, how much do you move it up and well, I'm kind of looking at things, and I just know certain prices and stuff. And so I'm split the difference on that. You know, it's one of those neural network kind of things. How do you do it? How do you do it programmatically? Okay. I wait for it to move up 4 ticks, and then if it's moved up 4 ticks, then I take a look again and I say, okay, what does my indicator say? It says hold it. So then I move my target up another 4 ticks. And if not, then I take it there. I don't, but that's kind of the question about how you do it. So I think I have tried those. Well, I don't know. I have to look. I've kind of tried similar things like that before, but they didn't really work. Because then what ended up happening was I wasn't actually picking up on an edge that said that it was going to continue moving up. And so the probability of it just coming all the way back and then end up being a losing trade was too high. Tommy says 1 and 2 standard deviation from the VWAP. Meaning what? Like that's where you think the target should be? I used to do a lot of testing with standard deviation from the VWAP. Don't feel bad. Seth hates everyone. Maybe. You just got to understand, like, think about my perspective from running a stream. And I go out and I see all of these people all of the time saying, oh, do this, oh, do that. And then I go and I backtest it. And the backtest says that is like a terrible thing to do. Right. And going and looking at things that we know have edge, like there's empirical studies out there that prove that there's some efficacy to these methods, and like nobody cares, right? And meanwhile, I see all of these retail traders that maybe they could be successful retail traders, but they've spent all of their time studying things that, as far as I can tell, are random. You know what I mean? That it bothers me a lot. It really bothers me. And my whole thing, the thing that I sit and I think about day to day is, how can I do a better job at helping people find the edge? Because I can't necessarily come out and say, like, you're going to find it. Like, there's nothing we know because of the competitive nature of markets. I can't just come out and say, okay, here is the thing that you should do, and here's how you should trade it. Right? That wouldn't help because everybody would trade it. But what I can do is I can go in and I can say, well, here's how somebody found something. So what are the things that I can teach them that would help them find their own things like that? And what are the sorts of things that do actually tend to have efficacy? Right? And then how do you convince them to move in that direction? Right? So when I see people come, especially if it's like a technical setup, yeah, it triggers me for sure. That's nothing to do with you. But why? That's like sitting on a poker table and helping other players play better. Well, but we aren't at a poker table, right? We are trading against these large institutions and market makers that are very, very good. And they have a really, really huge advantage against us. And so when they're trading some algorithmic quant strategy that they use, a couple hundred people to build and develop, how do you, as an individual trader, go up against that? Well, you have to collaborate to some extent. So you kind of have to find a way of balancing out collaborating and developing strategies together and sizing it appropriately so that you don't share it with the whole world, but just, your group of traders or whatever. And for the people outside of your group, you can use what you've learned. You definitely don't want to lead them to your edge, but you can use what you've learned to set them in the right direction on them discovering their own edges. And then hopefully, because you helped them, when they discover their own edge, they'll come back and share it with you. Right? That's really what it is. Because how are you gonna do that otherwise? Right? You're at such a disadvantage. How about using volatility targets as entries? So I've never back tested that per se, but when I looked at it, just from looking at it, I think that there's a lot of reason to believe that the volatility targets do not make very good entries at all. There's too much of a fat tail on when it goes through. And the number of times that it goes through is way too high. Do you have an order flow based indicator that signals the level of rejection / absorption? I have an order flow. So first of all, that sort of thing depends very much on the market, right? I've had a very hard time finding, like, if you see absorption, will it reverse, that sort of a thing. It's super hard. There's 20 points. Yeah, I'm really surprised that it went that far. This is a real, the market's really reacting to this news. It was slow at first, so they tricked me, but it really moved through. And I mean, to look back on it, this is one of the things that I find so funny. So, like, I got an amazing trade there in the 10-year, didn't I? That's pretty crazy. And I got out at, like, what, 9? So there was still more on it. That could have been a $500 plus trade. So market's definitely doing something today. And if we come back over to the charts. Oh, where did it go? So if I see like 10K absorption, 15K absorption at a level, that's pretty good sign that they might bounce. But it's not happening. You need to see it like at the bottom, like this right here. That's why I got out. That's why I gave up on it. There was, that's kind of like the limit of the order book, and this is like it broke through. So what we're seeing is a very rare event. But you come back onto the daily. What does that look like? Well, that kind of looks like there could be some volatility ahead of us for the week, huh? And never chase, like, when it keeps trending. Well, I say, like, the edges that I've really found are more along the lines of we're going to move in a direction, like, how do I say, we'll get a little bit of a move up, and most of my research has been around, okay, how do I tell if that move up matters or not? That's the whole thing. But the thing that we really need to figure out is, okay, but if I have one and I say that that's significant and then I get a winner off of it, how do I determine when it's going to keep going? What if you had a chance of opening a position 1 volatility target from price and just paying 5 points? No. Like, okay, so like if we get to the first volatility target, okay, if you had a limit order sitting there waiting for a price to reach that volatility target, and you're saying I'm paying 5 points or whatever, like the number of times that it would go through you is so high, the drawdowns would, even if it was profitable in the long run, that the drawdowns would just kill. So, because they tend to go through the target. Like, that's the thing you got to understand, is like that target is just like the point at which people start stopping out, you know? So there's a good chance that it will go through that a little bit. And then if it does revert, it will go through that for a little bit, calm down, and then maybe it will revert. So even if you were going to do a mean reversion trade, you would want to wait quite a while after it happened. Okay, I got to get going, guys. I will see you tomorrow. In the meantime,